Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Chris Engelbert, Founding Partner and Chief Investment Officer at Engelbert Financial Advisors. Chris, it's great to see you. Welcome back to Trade Talks.
Great to see you, Jill. It's a very special anniversary for us today. 4 years doing Trade Talks. Wow.
Time flies when you are having fun. Started off on the Philadelphia options trading floor, Nasdaq's Philadelphia office. And here we are 4 years later doing it with Zoom. So not only the technology changed, but so much has happened in the markets. And Chris, with that said, what has evolved over the past 4 years? It feels like it's been a really dense 4 years.
Yeah, I mean, obviously we've had the acceleration of social media, but really what's happened is what the retail investors are interested in now. Cryptocurrencies have exploded on the scene. We're having numerous conversations with clients on how to invest in them. What do we do? Are they legitimate? Compared to 4 years ago, where nobody knew what Bitcoin was, now obviously it's always in the daily conversation. And as a registered investment advisor, we've got to have these conversations with clients. I mean, this is quote, the new asset class, and whether you're investing directly in it, or in other companies that are, around the edges, it's literally here to stay, and it's exploded on the scene in the last 4 years.
And Chris, what has changed or has evolved for registered investment advisors with their practice?
Yeah, I think really what's changed is how we interact with clients. Now we're using multiple platforms. Obviously, social media, this format is very popular. But we also do video conferencing. Obviously, Zoom has come on. So the good thing about the pandemic last year was, for example, last night I had a Zoom meeting with a client. Rather than driving an hour down to their house, sitting for an hour, going reviewing their portfolio and driving an hour home, I was able to dial up the Zoom from my office, engage with them in 45 minutes. I mean, it's really helping RIAs be more efficient. I really think also that the clients really appreciate it too. So if you're a registered investment advisor, you've got to have multiple platforms and multiple ways to get your message out. So I kind of am using the analogy now that we're like a cool little pub, and we've got these craft beers on tap that you can only get at our cool little pub. That's really what registered investment advisors in the future have to be. You've got to have your firm be able to engage with clients and prospects in multiple ways. And you got to deliver your message in multiple ways too, so that people know what you're thinking and what you're doing with their portfolios.
And Chris, let's take a look at our charts here. Hitting all-time highs since the last time we spoke. Let's look at the S&P 500.
Yeah, so the S&P 500 now, if we close where we are today, this will be the 37th new high for the year. Literally what's happening, and clients are getting a little frustrated because, we run diversified portfolios for our clients. And, you got to understand that, there's a 20% weighting as far as an Apple, Facebook, Amazon, Google, and Microsoft. And those companies are really driving, the S&P 500. And people don't quite understand that versus what we're going to talk about in a minute as far as the Russell.
And with that said, let's take a look at the Russell.
Yeah, so the Russell 2000, was obviously small mid-cap stocks, and they started off the year with a big bang. They really looked like they were going to go great guns as the economy opened up. But you can get the feeling that a lot of people are very tentative about the back half of the year. Whether it's the Delta variant, people worrying about that. So the Russell is kind of on hold right now, while the S&P and the Nasdaq continue to power new highs. And this market's really being led by large cap growth once again. You and I talked about this a couple of months ago, where, every time it looks like large cap value is going to start to make a run, which it really began to this year, and it looked like growth was going to go by the wayside, all of a sudden, large cap growth comes back and, leads the charge once again. And that's really what's happening, obviously, especially with the Nasdaq.
And that was just going to your point, Chris, when we start looking at May, June, what happened in July, you're certainly seeing that shift there with the Nasdaq 100 names.
Yep. And whether it continues through the rest of the year, I don't know. But so far, the Nasdaq was playing catch up the first part of the year. it may be the place to be. We do a lot of comprehensive research and managing our clients' accounts, and August is a big month for us. And sure enough, in August, our models kicked out value and are overweighting growth again. So we'll see. I mean, the next time we rebalance those models is going to be in November. We'll see what the shift looks like then.
And, Chris, part of the recovery, you can also say, was due to the fact that the 10-year has corrected itself as well. I mean, that's, we certainly saw the Nasdaq 100 absorb that. Yeah,
and so I'm glad you brought up interest rates. So we try to tell clients, you got to watch the 10-year, and the 10-year really trades off of inflation worries and the economy opening up. And we saw the 10-year explode the first part of this year. And around March and April, the 10-year was at 1.75%. We felt in our shop that rates were a little bit too high for the year. So we did something, the fancy term is called lengthening duration of our clients' portfolios. And sure enough, rates have come down. Now, I think what interest rates are telling us is that the tremendous amount of stimulus that was pumped through the economy is starting to wane. And I'm not saying that we're going to have a recession in the back half of the year, but the growth of reopening may start to slow down. And I really think that's what the 10-year is telling us.
And to wrap up, let's take a look at energy. I mean, certainly that sector has been hit as we're worried about the Delta variant, some other variants being introduced into the system here. And, it is going to impact demand at some point.
Yeah, I mean, energy prices exploded in the first half of the year. Now, the last couple of segments you and I did, we were showing monthly charts going way back several years to the peak. And there's a big downtrend line that this year energy prices, oil prices have broken above. They're remaining above that. I mean, what we're trying to tell clients as far as inflation and commodity prices go is that they were probably too low the last 5 to 8 years. And obviously last year they bottomed out, but now we're in a new normal where you're seeing new higher prices, and we don't think that's going to change anytime soon.
All right, Chris, appreciate the insight as always. Happy for your anniversary. Thanks for joining us on Trade Talk.
Yes.
Global Market Reporter at Nasdaq.